Good morning, afternoon, or evening, everyone. Thank you so much for joining us on another episode of Coffee and Cryptos. I'm Ryan, and today I'm drinking black coffee that was made with a Chemex. It's strong stuff, but exceptionally smooth. If you're curious on how to make your own coffee with a Chemex, be sure to check out Dom's video on pour over coffee, which I'll link in the description below. Now, on last week's video, I mentioned a concept known as the Blockchain Trilemma. In today's video, we're going to examine that concept more in depth. Let's get started. So what is the Blockchain Trilemma? A phrase that was initially created by Vitalik Buterin, the founder of Ethereum. It is the concept that all cryptocurrencies sacrifice something. But what exactly are they sacrificing? So in cryptocurrency, the three main pillars of any project are decentralization, security, and scalability. These are the main focuses of developers, and it is what is needed in order for a crypto project to compete with the likes of other centralized systems like Visa and Mastercard. In regards to the blockchain trilemma, it postulates that blockchains can only choose to do two out of those three pillars very well. For example, you can create a coin that has great security and scalability, but poor decentralization. Or a coin that has great security and decentralization, but poor scalability. Now, the only real cryptocurrency that I've seen so far that claims to have solved the trilemma is Algorand, but the crypto community seems pretty divided on actually agreeing with that assessment. In any case, I think its all-time price chart speaks for itself. Disclosure, I do not hold any Algorand. So now that we've discussed what the three main pillars are, let's examine each one a little more closely. Decentralization. Now, this is essentially a cryptocurrency's ability to have its transfer of control and decision-making from a centralized entity to a distributed network. In other words, it needs to operate on a trustless system without the need for a central trusted authority. Security. This one is pretty self-explanatory. How susceptible is the network to different types of attacks? Does the network have frequent bugs or outages? Or do users lose their funds on it? Many say Solana falls into this category, where security is its weakest point. I'll leave that up for you to decide, because some analysts also argue that Solana is not sufficiently decentralized. Disclosure, I do hold Solana. Lastly, we have scalability. This one pertains to a project's ability to grow in order to meet increasing usage and demand. The project may start out only handling 20 transactions per second, but can it be upgraded to handle 100? 1,000? For comparison's sake, Visa and Mastercard can handle thousands of transactions per second. As time goes on, better upgrades and optimizations will ultimately continue to tighten the lead. And that's the blockchain trilemma in a nutshell. Now there's still the matter of crypto news, and I've got a few headlines lined up for y'all. Headline number 1. The investment firm Fidelity is doubling down on its bet on cryptocurrencies. After launching its digital assets division in 2018, the firm is now moving to hire more than 100 new employees to its crypto workforce, bringing its total number of crypto employees to 500. Earlier this week, the investment giant announced that it would be offering its clients exposure to Ethereum through a new Ethereum index fund. However, the fund is only available for clients who are able to invest a minimum of $50,000. Prior to that, Fidelity began offering 401k plans that had Bitcoin as an investment option. Headline number 2. Bank of America analysts say that more investors are increasingly starting to view Bitcoin as a safe haven asset. According to a recent report, Bitcoin now has a very large correlation with gold prices, suggesting that people are using it as a hedge given uncertainty in the markets. A safe haven asset is basically an asset that people believe will protect their portfolios during an economic downturn. And gold is a great example of this. Now, Bitcoin's relationship with gold has historically been used to gauge investors' confidence in its ability to be a store of value. The two were closely linked from June 2021 to February 2022, but the correlation turned negative in March. However, the correlation has once again turned positive as of September, and in early October, the correlation reached its highest point in a year. Believe it or not, as of last week, new data also showed that Bitcoin is now less volatile than both the S&P 500 and the Nasdaq for the first time since 2020. It will take more time, but I believe that crypto will eventually become even less volatile as more institutional money and retail jump on board. And lastly, headline number 3. Increased regulation by the Securities and Exchange Commission and institutions jumping into crypto appears to be good for the long term. According to a recent MLIV Pulse survey of investors, crypto becomes a more attractive investment as the SEC and other regulatory bodies attempt to provide regulatory clarity to the space. TIAA Bank's Global Markets President Chris Gaffney says a regulated environment opens the doors for more professional investors to get into crypto, which can pay off for those playing the long game. Also noteworthy, sentiment towards cryptocurrencies have shifted from a mostly pessimistic attitude in July to now more increased optimism. Despite the crypto crash, big banks saw the opportunity to dive in, and interest remains particularly strong, especially among major financial institutions. Payment giants like Mastercard, Visa, and American Express have been constructing their crypto capabilities for years now. They aim to support a wide variety of customers' choices of payment. Many times those in cryptocurrency think it's crypto versus these legacy financial giants, but who's to say they can't coexist? Institutions getting into cryptocurrency can be a major catalyst for crypto's growth and accelerate us down the path towards mass adoption. Well, that's all for this one, guys. I hope you learned something new today. As always, thanks for watching, and don't forget to like and subscribe if you enjoyed the content. Follow us on Instagram at Coffee and Cryptos, and I'll catch you all on the next one. See you around.